Okay, I've cracked the secret to growing a small account. If you do exactly what I say in this video, you will be able to grow your small account just like I've done 6 different times. Small account 1, we did 2,300 to 10K in 4 weeks. Small account 2, I did 200 to 2,300 in 1 week. Small account 3, $87 into 4,200 in 1 month. Small account 4, $500 into 2,200 in 10 days. And small account 5, $947 into 9,178 in 3 weeks. Everything's verified on my Twitter. You can see the small account I'm on right now, small account 6, where February 15th we did 1.3K to February 23rd, 10K. That's about a week of actual trading. And I'm still on track to trying to continue to grow this one. You can see I'm in a trade right now. Nonetheless, here's what we're going to talk about today. Is exactly first, I'm going to show you the risk management side of how to actually grow your small account fast without blowing it up. And then also at the end of the video, show you the strategy, the actual entries and exits I used to go ahead and grow these small accounts. So you can do the same exact thing in a very simple 2-step strategy that I use that works extremely well. So let's get into it. Now, let's say, for example, you have 3K. Let's say this is your total bankroll, and your goal is to get it into 30K. I'm going to show you exactly how to do that. Now, if you have 3K, I know some of you guys don't have that, but that's fine. What you want to do is actually separate it into 3 different accounts. Okay, you don't have to actually fund 3 different accounts, but here's what I like to do. So what I'll do is I'll separate it. You'll put 1K in about 3 different areas. 1K here, 1K here, 1K here. Now, what I'll do is I'll actually fund one account with about 1K, and I'll keep the rest of this in cash. Okay, so this will be cash, and this will be the account. So we actually have essentially 3K is what I use as a small account bankroll, but we're separating it into a small account, so it helps us be more disciplined, and also just gives you better edge, and I'll explain that later in the video. But essentially, here's how it works, right? You have your 1K. What I like to do is divide it again by another 3. So we'll go 300, we'll go 300, 300. Now you keep this in the account, okay? You don't have to take it out. You can keep it in your Robinhood, any brokerage, doesn't matter, right? What I do is I give myself 3 trades. You may be thinking, well, Jordan, that's kind of stupid. If you lose 3 trades, you blow up the entire account. But the goal here is that, A, we're trading a strategy that has a higher than 50% win rate, so the odds of us losing 3 plus 2 more accounts, which is 9 total trades in a row, is ultimately very close to 0. And the other thing is the way that we're trading them, okay? So what I like to do is this. I'll typically get in 1 trade with $300, right? So get in 1 trade with $300. And again, I'm going to show you the exact breakdown of strategies of how I actually enter and exit so it all makes sense. Now I have $300 and $300. I have $600 cash left in the account. Now there's 2 things that I do with that extra extra $600. The first thing is I'll either double down on my position, so I'll add another 300 to the position if it makes sense, which again, I'll show you how in the video. The other thing I'll do is add 300 as a hedge, okay? So we're not only, it's not like we're not having a stop loss or anything. We're actually using a hedge here. So in case we're wrong, we can actually still profit or lose less money in the sense of how we're talking about it, okay? So we actually divided up pretty quickly where we're no longer doing the classic, risk 1 to 2% of your account per trade, which, by the way, I completely recommend for large accounts. This is what I use on my main account, okay? This is kind of like a separate strategy, but I 100% recommend this. But for this account specifically, you're essentially risking, if you can think about it, 33% of the account per trade, but you also have a hedge, right? And you also have a double down if you need it, okay? Which obviously sounds a little bit crazy, but the whole key here is that you have multiple quote-unquote accounts, you have multiple bankroll, okay? So you're starting with your bankroll here. And the goal is if you lose one of these, that's fine. You still have 2 more chances, but the goal is that you won't lose this unless you lose 9 trades in a row, which is extremely difficult to do with a strategy that's over 50% win rate, okay? So it's extremely, extremely simple. Right? That's all it is. You basically divide it by 3 again, and you get in very, very high quality setups. Okay, we're not taking a million setups a day. We're only taking high quality setups. We're taking swing trades. Okay, and we're doing options. I'm going to show you guys the exact breakdown of which options to get and everything else like that. So let's look in the chart to show you guys the actual breakdown of kind of how this works. All right. So let's say we have, again, a 3K account. So we divide it. We have a 1K account. We're putting $300 in. Now, the strategy is really, really simple, right? If we look at a chart like Tesla, just like this, we go on a 1-hour chart, right? What do we notice? We notice that there's a lot of highs and lows. All right, what we can even do is go on TradingView, type in pivot points, high, low. It's a free indicator. It'll go ahead and point all these out for you, okay? You don't need to see this. If you want, you can use it, but it's really, really simple. So I'll just get rid of it. All right, so you can see we have all these highs, all these lows, all these highs, all these lows. Now, how does this strategy work? Well, you want to wait for a previous day's high or previous weekly's day high or low. And you want to see step one, which is going to be a stop hunt. Okay, so let me go ahead and draw this out for you guys to make it easy. Okay, step one, identify high or low on daily or weekly time frame. Okay, really, really simple stuff. Right, so if we're looking at Tesla, let's just go with this example here. So let's say we're looking at this. We have this low, we have this high, right? Our pivot high, pivot low. Really, really easy to understand. You go ahead and you can draw your level at the bottom there. All right. So then what do we want to do is this. Step two, right? What we want to see is what I call stop hunt. Okay, this is really, really important because you have to do it the right way. Stop hunt plus reverse. That's the actual strategy. This is actually how this works. So what happens is price is always moving from highs to lows. You'll see this happen a lot. So when price is coming down, when we break this low, we want to see it quickly reverse back up. And what we're trying to do is actually trade it back to this recent high or back towards this high or another high that's in the way, like one of this one or one of this one, right? But we're waiting for price to actually stop on a low, reverse back above that support level, and then continue moving higher. All right. So really, really simple stuff. So let's take a look at example on Tesla, right? What do we see here? We have this low. Price will go ahead and stop hunt that low. So we break it. So what does that tell us? That tells us that basically everyone or most people that bought in this area is now getting stopped out. And it also tells us that a lot of new shorts are going to be shorting in this area here, right? They like to, short on breakdowns. So when price ends up coming back above here, what do we now have? We now have people who got stopped out who are like, oh my God, it's coming back up. Let me go ahead and chase this back in. Let me get FOMO. Let me buy back. And then you also have institutions who are just loading up shares here while retail was shorting, right? So they're stopping out. Retail or institutions were picking up all of these shares. They were going ahead and they were just buying all of the shares right here, right? And so that drives price higher. And the confirmation we get is that when price actually comes back above this high, we can go ahead and look for a long setup targeting these liquidity highs area, which would be right around this here at this high and right around this here. And we would also put in the third target here, even though it never hit until all the way down here. But you guys get the gist, right? So that's the strategy that we want to look for. And it's really, really simple. So what do we do? Step one, we identify the low. Step two, we wait for the stop hunt and reverse. Now, how do we identify when price is actually reversed? There's a few things you can use. The first one that I like to use as a confluence is what I call volume. Okay, so when we see increased volume at that stop hunt, that is a good sign. Okay, so we want to see volume increase. Oops, let me go ahead and draw this out. We want to see volume increase at the stop hunt, right? And then the other thing we want to see is immediate fast reversal. Okay, immediate fast reversal. If we see these two things, that is like a key indicator that price is going to end up reversing, right? So what do we see here? Tesla. We see price go ahead and take out this low. We see an engulfing pattern. We don't really see a lot of increased volume, a little bit here, but ultimately not. And then what happens? We end up having a daily close back above this level. The key thing is that we get back above that support level there, right? So we see an engulfing pattern here, which is very bullish. Price moves fast, immediately reverses back above that support. So what do we look to put on? We look to put on a trade where we get long, put our stop loss below the low, and then we target the liquidity high, either here, and then we target up here as well, all right? Now that's exactly what we want to do. So when this happens, how do we actually trade this? How do we actually use this as an option? I'm going to show you a few more examples too later in the video, but for now, let's go back to the whiteboard and kind of show you something interesting. So first off, let's go over the options that we want to take, all right? So the options you want to take are really, really simple, okay? You want to close them in the money, but start out of the money, all right? So if we're looking at Tesla and we're targeting this 188 area and then this 193 area and then 196, what we want to do if we're entering down here is we want to get options either in the, I'd say the 185s, the 187 and a halves, or you can go with the 190s or 192 and a halves, okay? Because I think Tesla goes by 2 and a halves. And if you do this, the goal is that you're getting out of the money and you're expecting price to eventually go in the money. So you're getting that in the that boost from the option that goes out of the money to in the money. And then in terms of expiration, depending on the time frame you're looking at, you either want to go with weekly or next week. It's always better and always more safe to go with the next week's contracts. So that's what I would highly recommend. Now, the other thing that's really important that we talked about is that if you go into $300, you still have another essentially actually $600 of cash. Okay. So how does the hedge work, and why do we actually use that? And then also, where do we use the other 300? Well, it's really simple, right? If price ends up getting us a pullback, that's when we want to add to our position here. So let's say we get in here. You can see how price actually opened up lower the next day. Let's say that didn't happen. The price just kept going and going and going. We wouldn't use the other 600 cash. We would simply let it ride, get our profits, make 200, 300, 400% on the option, and then walk away and just look for our next opportunity. Now, if prices gives us a gap down or gives us a pullback or an opportunity to get long again, we should have built up some sort of demand in this area, right? Because if we're getting a stop hunt and a reversal, we typically expect price to have some sort of demand or some sort of support form at this area. So when price comes down, we like to do two things. I like to get a hedge, and I also like to double down and get myself a better average. Because think about it, our stop loss for the long calls are going to be right below this low. After the stop hunt happens, price should continue moving up. We shouldn't see price go ahead and break that low again. That's where we use our stop loss. And the reason we get a hedge is because typically, not all the time, but typically, if price is in a range, we go ahead and we break a low, and then we fail to actually get back inside, we end up dumping. And so that hedge is going to help cover us, because what we're going to do is we're going to get puts. You want to get more closer to in the money puts. You want to get, if we're getting long here, and we're also adding hedge as a puts here. What you want to do is I'd probably say the 175. Where once our stop losses hits, we're in the money. That's really the best thing you want to do. So we now have 300 in calls. The pullback happens, right? So now we have 600 in calls, right? We double down in our position, and then we have 300 in puts as a hedge. You can keep 100 cash as well. This is assuming a 1K account. But you do this. And so what are the scenarios that's going to happen? Okay. Scenario one is that price just immediately dumps when we're wrong. So we lose, depending on the option, maybe, we'll call it like half, 50% of the calls here. So we lose $300. And if price dumps and the hedge keeps going, then we're going to make our money back. We're going to be basically break even. These options on the hedge are going to go about 100% or more, because we still could be profitable, right? Now, the other scenario is that price just keeps going up and up and up, and we end up making money on the long side, okay? The only real way we lose money is in two different scenarios, okay? Now, scenario one is where we stop out on the long calls, right? But we're in our hedge, and then price just ends up coming back out, right? And we end up reversing, right? And the other way that we lose money is that price ends up reversing, but we kind of just consolidate, go back down, don't really do much, and just stay neutral for a while, okay? Getting a week out, getting more time on your contracts is going to, help fix this. And then the other way is that essentially there actually is no other way, because, look, we're not here to simply avoid losses. We're here to minimize losses. We're here to make money, okay? Losses are going to happen. We have to accept that. And so the way the strategy works is that the edge is that this happening, this scenario where we do break this low and then just kind of consolidate or come back up, is very unlikely. That's essentially how we trade. That's the probability I take when I grow these small accounts. It's the fact that we are expecting this not to happen. That's essentially what we're betting on for this strategy. And it works extremely well because we have that hedge. And even if we lose the 300 on the hedge, we have now doubled down. Sorry, where am I going with this? We have now doubled down. So now we are $600 long. We are $300 short. So if price goes up, we're going to minimize it from that 300 loss. But this should still do about 200 to 300%, which would be about $1,200 to about $1,800, which is about 20 to 80% growth of the actual option. And that's if this goes to zero. When price starts to reverse, what you can actually do is, start to make higher highs like this. You can actually cut this at maybe a loss of 50%. So you only lose about 150, right? And there's a lot of other variations you can do, but this is what you do to keep it really, really simple, okay? And doing this works on all different time frames. I prefer it on swing trading. You can see, if I even zoom out on a daily time frame, it's happening like right now on Tesla. You can see if we look at this low here, go to an hourly chart, see how we stop on it, we have increased volume, especially on like a 15-minute chart, a lot of increased volume. We immediately reversed. So what you could do is look to get long, if your stop below the low. And again, depending on time frame you're looking at, Tesla, if we get to move all the way back to this high, that's a crazy risk reward, right? If I get 2-3 weeks out, the 200 calls, the 190 calls, the 185 calls, those could print. You could also do it on a shorter time frame, right? Where I just target this high right here. Oops. I just target this high right here. So I got the 182 calls, the 180 calls, and I just go for like 50% or 100%, right? There's a lot of different variations you can play with this, but ultimately having the strategy of having a hedge, being able to double down while also having that hedge is protecting you so you don't have to go through that 1 to 2% small account growth. Which, by the way, again, I still recommend you do with a large account. This is what I do with my large accounts, my main accounts, okay? Because it is the most efficient and less emotional way to grow, right? I don't necessarily doing this type of method for larger accounts because it get a little crazy, you get a little emotional, a lot of things happen. But yeah, you can see that's exactly what I did for this account. I did it for a bunch of different other accounts, all this on TD Ameritrade, everything's verified. And yeah, really, really simple setup. If you do this, you will make money. And I hope you guys did enjoy this video. I know it was kind of fast, a lot of information. If you did, go ahead and leave a like, subscribe, comment down below. I also made a free training going over the exact 3-phase system I've used to help turn over 300 students consistently profitable in just 8 weeks. So I made a free training for that. Link in the description below. Go ahead and check that out right now because I promise you it is going to help you become a consistently profitable trader in a very, very short period of time. So with that being said, leave a subscribe, comment below, subscribe, leave a like. I'll see you guys in the next video.